Hey y'all, what's good? It's your girl Vernae, sliding into your feed with some real talk on mortgage rates. We're going to talk about what's going on now, what's dropping, and whether or not you are ready to buy a home. If you're planning on buying a home or hoping to soon, grab your coffee, your Thai tea, or your choice of drink. Lean in because I could be giving you some information that may save you thousands. Let's go. Hey guys, what's good? It's your girl Vernae coming at you with some more information about mortgage rates. So you've heard rates have dropped a little. So I'm coming to your feed with some real news about mortgages. What's going on, what's happening, whether they're dropping or if they'll drop some more. So if you're planning on buying a home or hoping to, grab your coffee, your Thai tea, or your choice of drink, and we're going to get into it because I may be able to save you thousands. Let's go. So if you've been obsessively refreshing your Zillow, stalking home tours on Instagram, or arguing with your bank about what is a mortgage rate? What does that even mean? Well, you're not alone. The mortgage rate roller coaster is real, and I'm here to help you. So buckle up, enjoy the ride, or at least tolerate it for a little bit. Maybe we'll score some savings. So, what's going on with the current US mortgage rate? What might happen in the future, and how you, yes, you, could be sitting there talking about your dream home, your dream kitchen, and be prepared to pounce on a deal. So, here's where we are, right here for the 30-year mortgage rate. So this is where we are for the 30-year mortgage fixed rate. It dropped to about 6.35%. If you're looking right here, the average is about 6.29. 15-year fix around 5.25 for the national average, or 5.65, depending on where you are. So these drops are largely driven by weaker job markets and fewer jobs, which means employment rates are up. So these drops are largely driven by weaker job market signs, fewer jobs, and more unemployment claims. That means people are losing their jobs and they're filing more unemployment. Also, the 10-year yield U.S. Treasuries have gone down a bit, which has eased some of the inflation. However, yields on the 10-year U.S. Treasuries have gone down a bit, and those yields are a big piece of what mortgage rates follow. So, bottom line, things are getting slightly better, but we're still not in the cheap area. So, 10-year U.S. Treasuries have gone down a bit, and so have those yields, because that's a big part of what the mortgage rates follow. Hey guys, what's good? It's your girl Vernae, sliding into your feed to give you some real talk on mortgage rates. What's going on, what might be dropping soon, and I want to help you if you're planning on buying, or at least hoping to buy a house in the market soon. So grab your coffee, your Thai tea, or your choice of drink, and let's get to it. You should also figure out what you can afford. Do some back of the envelope math: mortgage payment, property taxes, insurance, and maintenance. Don't stretch yourself too thin. Know how much of a down payment you can afford, but also know the bigger the down payment, the better the loan and the lower the rates. Or you may be able to know how much down payment you can afford. Remember, the bigger the down payment, the better the loan, the lower the rates, and you also may be able to avoid mortgage insurance. All of these steps will help you get pre-approved. This means a lender has looked at your credit and your finances and given you an estimate of how much they'd lend. So when you see a house you like, you're not scrambling. Shop around, compare lenders. Don't just talk to your bank. Get quotes from multiple lenders. Pay attention not just to interest rates, but APR, closing costs, points. Ask about float downs or lock rate options. Sometimes you can lock in a rate with the safety net of switching if the rates fall more. But there are trade-offs. So be ready to move fast when your time comes. Inventory, meaning houses for sale, is improving, but still tight in many markets. When rates drop, there could be a surge of buyers, which makes competition a little stiffer. Have a list of neighborhoods, homes, and styles, or must-haves versus nice-haves. So when something good shows up in your price range, you're not wasting your time. Keep watching the economic signals, which means inflation reports, job reports, Fed meeting announcements, treasury yields. All of this feeds into the mortgage rates. But that's why you got me, your mortgage bestie. So if you see signs of inflation falling, or the Fed hinting at more, or Feds hinting for more cuts, this could be a signal to lock in, or also watch out for risks, because yes, just like anything financial, these things could mess up even a good plan. If inflation comes back, the Fed might hold rates higher longer. And that's when mortgage rates get stubborn. If there's a strong job market, if there's a surprising gain in employment, that could push yields up, which pushes rates up, global or domestic. Any policy shocks, shifts, supply chain disruptions, geopolitical issues, all of that can affect the market. So what should you do? Here's my advice. If you can afford it, start the pre-approval process now. Don't wait until you see a perfect deal. Consider locking in a rate if you find one that's decent and you're feeling good about the house. Because while rates may drop more, the risk of them going back up or staying flat is real. But if you like to gamble a little bit, maybe wait just a little bit if the economic data suggests that Fed cuts are coming. But keep all your paperwork ready. Be flexible about what you want. Maybe a slightly different neighborhood or a home that's maybe a fixer-upper. Maybe think about your modest size. Sometimes those things can give you some wiggle room to nab a better deal. So here's where you come in. If any of this information helped you even a little bit, share this video or post with a friend. So here's where you come in. If this video helped you even a little bit, share this post or this video with a friend, someone who's house hunting or thinking about purchasing a home. Show them this video, and if you have questions, both of you guys, drop your questions in the comments. I want to know, what rates are you seeing locally? What kind of house do you want? We'll compare intel. Follow so you don't miss when I break down the Fed decisions, rate changes, or how any of this affects your pocketbook. Because at the end of the day, this is your money, your future. And I want you to walk into home ownership feeling smart, confident, and ready, not scrambling. Thanks for hanging out with me, and I'll be back soon with more updates. Until then, may your credit be good, your rates be lower, and your dream home be waiting. Peace.